Hi, this is Zach Meir with the Bulletin Board Heroes here at Zach's Traders Cafe for Tuesday, the 25th of July. Starting off with the FTSE 100, where it's basically been up and away since the second week of this month. We pushed through the rising 200-day moving average. We had that signal, which is hopefully a buy signal, with the falling 50-day moving average through a rising 200-day line. That suggests that we should at least head up to that February resistance line there at 77.70. Above that, there's the perhaps unlikely scenario that we would head up towards a March resistance line projection as high as 8,200 over the next 4 to 6 weeks. Below the 200-day line at 75.70, there's the risk of a retest of that breakout from the June resistance line there around 74.50. But really, with the RSI, in the 60s, and with that rising 200-day line, we are looking for higher prices for the FTSE 100. On to the DAX, where we're waiting for perhaps waiting for a big break to the upside. Here we've got this sideways consolidation, a very bullish consolidation. Get the market sort of taking up the slack above the rising 50-day line. Just need an end-of-day close through 16,300 to then open up the idea that we could head up to the top of that rising trend channel from August as high as 17,200. Below the 50-day line and below 16,000 is the risk of testing the floor of the channel down to 15,700, but we're not really looking that way, especially given the way that the RSI at 58 is right in the box seat for further gains. Moving along to the Dow, which has been the star of the show, I suppose, in many ways over the last week or so, rising every day for the last more than a week. We had our initial target there around 15,100, which was a March resistance line projection. Above that, looking for as high as 37,300 by the end of next month. Sounds a bit unlikely, but especially with the RSI in the overbought area now, and the last time it was overbought like this was not a good experience back in August. But these things can keep on moving, especially given the way that both the 50 and 200-day lines are both rising. The last time in August when we were overbought, the 200-day line was falling. Moving on to Bitcoin, which has been the weaker part of the non-stocks that we look at. Here we've had the expected dip down to the 50-day line at 29,000. Below that, there's the risk of going back towards the early June resistance zone and the 200-day line at 26,000, but we're not really looking for that at the moment. We're expecting that this market will then flip higher. End of day close through 30,000 will then open up the idea that there is a new leg to the upside coming, and we could head as high as 36,000 at that June resistance line projection from last year. Nightmare scenario is that we have to retest June support and the floor of the channel from last year at the 25 to 26,000 zone. RSI in the bearish zone now, well below the neutral 50 level, so that is why we have to watch out for a potential rug pull before any new leg to the upside. On to the stocks, and a few new names, or at least new names in the recent past, and weird and wonderful situations. First, starting off with actual experience, where it looks as though we're in a rising trend channel base. Here the shares have broken a line of resistance from back in May around the 0.5 pence level. Above that, we're looking for at least the 50-day moving average at 0.65, especially given the bear trap gap reversal that we've had from below the July floor at 0.52. The longer we stay above 0.52, the better. And as regular watchers of this video will know, bear trap gap reversals tend to be pretty good signals. Best case scenario of the next 1 to 2 months up to 0.81, but obviously let's see how we do just over the next few days vis-a-vis the 50-day line. Moving on to another new name for the recent past, Aferian. Here you can see that we seem to be in a triangle base. We've got bullish divergence from back earlier in the year, but the main thing here is that we broke a line of resistance from June around the 10 pence level, and we've gapped higher, so another bear trap gap reversal, in this case from below the June low there, around 11.5 pence. The longer we stay above 11.5, the greater the chance of 20 pence as soon as the end of next month. The hope is that we won't just hit the 50-day line at 15 pence and then just come back after this bear trap gap reversal. On to Bradda ahead, which is also finally looking a little bit better than it has for quite some time. Here you can see that we had a gap down back in June. We've had a gap higher today. So it's a bear trap island reversal, which is normally a pretty good signal. Handbrake turn with the shares hitting new lows yesterday and then gapping up today. Above the initial July resistance at 4 pence on an end of day close basis, looking for at least the shares to test the 50-day line and hit the top of that gap there from June around 4 3/4 pence. Best case scenario by next month up to 5.4 pence, which with the bullish divergence line that we've got here as well would seem to be a possibility, and on the basis that under 4p has been an overshoot to the downside. Destiny is next, and here the picture is that we broke out of that falling wedge. It was a bear trap from below the March support there at 27 1/4 pence. We then swiftly moved up to the 50-day line, and we've had another gap higher today. We had the initial gap there off the lows in July, which was actually a great signal if people were watching at the time, which they probably weren't. And so the idea that we could at least get up to 37 pence over the next couple of weeks seems to be very much on. That's the top of the post-March triangle. Best case scenario by the end of next month, or that kind of time frame, is up to 48 pence, which is a November resistance line projection. But I think most would be happy if we just got up to the 200-day line at 37 pence and then consolidated there. Moving on to Evgen, which is also on the front foot at the moment. Here we've also broken out of a wedge. It's a bear trap from below the June support at 3p, above 3p, looking for 4 1/4 by the end of next month, hoping that we will just blaze through the 50-day line on the basis that there is bullish divergence, i.e. lower lows in the price for July, but higher RSI trace as well. Going on to a stock which don't think I've ever covered before, but here it is today, Gran Tierra, rising or possible rising trend channel base here after a rather weak period for the shares. Bullish divergence going into July, and that's sort of kicked in for the shares. Had a gap higher back in the beginning of the month, and then a massive gap through the 50-day line. Looking for the stock to head up towards the top of that rising trend channel from May, as high as £5.50 by the end of next month, although I'm guessing that this is not the most liquid of situations or has the tightest of spreads. On to N4 Pharma, where people seem to be getting excited. I think there was patent news on the company, but here we've had unfilled gap to the upside. It's another bear trap gap reversal. That seems to be the theme of the days so far. Gapping back above the April support there at 1.6 pence. And the view now is an end of day close above the top of that falling wedge from November at 1.9 pence could take us up towards 3.2 pence as soon as the end of next month. The negative scenario would be that we'll just fail near the 200-day line, as we've done many times since last October. But let's see whether that gap suggests that the bears have been caught on the hop. That was also a brief bear trap from below September support last year around the 1.5 pence level. So looking decent in terms of the possibility of a lasting recovery there. On to Novacyt, which I looked at, I think, a few weeks ago, and had the initial target, which seemed to be sort of pie in the sky, around the 64 pence level. I think the shares must have been in the 40s at that time, but we've powered through that target around 63 pence and seem to be heading up to the February resistance line projection as high as 82 pence, which one would expect maybe by the end of this month. The signs for recovery were there in the sense that we had unfilled gap to the upside earlier this month. In fact, 2 earlier this month, and that 2 unfilled gaps to the upside normally means a re-rate, a serious re-rate is on its way, over and above the fact that this stock also had bullish divergence in the RSI window. Moving along to one of the stocks of the past week, Optibiotix, and here, so it's been the gift that keeps on giving, but it's done a pretty good job. We had our initial target there near 14 pence, next target there near 19, and then the final best case scenario target up to 34 pence by the end of next month. It looks like it could do that by the end of this month, that September resistance line projection. The gap high yesterday was actually showing that maybe more people are coming to the party, and we're expecting maybe the shares to fail near that November resistance at 22 pence. But certainly while we're above 22 pence, looking for that 34 pence, and helped by the way that both the 50 and 200-day moving averages are rising, which suggests that we'll have a golden cross buy signal by the end of the next couple of weeks, and the run up to a golden cross tends to be the strongest part in the cycle. Moving on to a stock where I was looking for a decent target to the upside, and maybe it seemed to be a bit ambitious at the time. I think the shares were 5 or 6p yesterday. Looking for up to 13 pence by the end of next month, and the way things are going, it looks like Probiotix might do that by the end of this month. And I suppose after that, then we can look for a higher target, which might be actually up to the old support there from the autumn at 19 pence. But let's just stick to 13 pence by the end of this month, especially while we remain above resistance on the way down around 8.75 pence. Next situation is Reach, which is broken out of its recent malaise. Here you can see that we've broken that trend line there from November last year, and we've broken above the previous June support there at 76 pence, above 76, looking for up to 92 pence at the top of that broadening triangle from back in March. The share's just filling that gap there from May, and an end of day close above that gap at 82 pence would be a follow-on buy signal. Onto a stock which has done exactly what you like to see after a bear trap reversal. This is Truspine. There was a bear trap from below the October support of last year at 66 pence. Shares then gapped up, never filled that gap, and have then broken the high of the gap up day, so to speak, at 82. Above 82 pence, we're looking for the shares to head up to as high as £1.20 by the end of next month. If you're cautious, you might want to see the shares break that 200-day moving average on an end-of-day close basis. That would still offer around 30 pence of upside, but the shares certainly on their way, and a great example of the bear trap gap reversal, and also an example of bullish divergence, because there was bullish divergence going into the days before that gap higher. The 50-day line rising, as is the 200-day line, so we could have a golden cross sometime in the summer. Onto a stock which seems to have pulled a rabbit out of the hat. We've got Truspine, which has broken a trend line there from back in September at 1.25 pence. Above that, placings permitting, we could head up to 2.7 pence over the next month by way of clearing that 200-day line. I suspect we haven't been above the 200-day line for a long time. It looks like we haven't been above that since the summer of 2020. So this really would be a sea change for the company with that FDA news. So well done to them, and I suppose that's a slight pie in the face to the bears. Moving on to Thor Explorations, which has hit the 23 pence target I was looking for. That was in play basically once we gapped up through the 50-day line back in the end of last month. It's basically an island reversal and a bear trap island reversal as well. Above 23 pence, as suggested before, we're looking for up to 29 pence, which should be delivered hopefully well before the end of next month, now that the logjam in the low 20s has been cleared. Extended bullish divergence line there from last July, so this should have decent momentum behind it, over and above the fact that we've got both the 50 and 200-day lines rising, and that is a decent signal. On to Vela, and as the final situation here, we've got a decent break of the falling wedge there from back in April, and looking for up to 0.27 by the end of next month.